Hey everyone, this is the time, the one we've all been waiting for, because if you've been kind of following any of the news, which if you're kind of on the channel, I expect you have, and you've been following what mortgage interest rates have done, and you want to find out how it's affected the Halifax housing market, well, this is the right place to be, so let's get into it and find out. Good morning, good afternoon, good evening, covering all the bases so that whenever you are watching this video, we've got you covered. Richard Payne here from Halifax Homes and Lifestyles at eXp Realty in sunny Nova Scotia, and we're going to have some fun today because we are going to give you all the details as to what's going on with the Halifax real estate market, the stats, the numbers, the things that basically tell us a story as what's going on. Because so many things have been changing. Not only have we had the interest rate that's been kind of climbing, and obviously the federal government has been announcing the base rate increases. A little trick, we think there's at least another couple coming as they meet kind of, I think it's September, October and November. We'll probably see some more interest rate increases coming on there, and that's going to be in effect. But we are here at the beginning of August, looking back at July. We want to see what are the real stats showing us and what's going on, because we said in the last couple of videos that the market is changing. Well, now we're actually looking at the stats and it has changed, past tense. We are starting to definitely see an impact from those interest rate changes, as well as just, it's kind of summer, so a lot of buyers basically slow down, a lot of listings stop coming on the market because they kind of go, it's summer, I want to enjoy everything. There's obviously a lot more planes going around, you can go to the campgrounds, you can enjoy the sunshine. So it is a naturally slow time, but if we compare it to last year, then that will give us a true impact of what's really going on. So let's get into that first thing, which is what is the average price here in Halifax? Now, we are covering the whole of the Halifax regional municipality, fairly large area, all the single family homes, and we are at $558,000. That's come down quite a lot. So last month that was just over 600. So we're down $42,000 on last month, 7%. But we are still up $58,000 and 16% on this time last year. The key thing to look at is, well, what's the inventory levels doing and what is going on kind of in the trend? Because like I said, we're at 558. Last month we were at 600. We're coming off a high like earlier on in the year of around about 650. So you can see that we're kind of definitely trending down, but this is the first time as well that we've seen such a fairly sizable drop in the actual sale price from the previous month to this month. $42,000, that's quite a good chunky number. Now, the listing price was $545,000. So that puts us at 102% in terms of what people are paying versus what we're listing for. Last month, that was 107%. So you can see the gap between here's where we list, here's what we buy for, sell. It's getting closer, like it's definitely getting there. And we'll go into some later information just on specific markets, and we'll be able to give you like, okay, this is what it listed for, this is what it sold for, and you'll see like how close they actually are. So then when you look at that, like I said, we're only 2.4% over the asking price. So what does that mean for buyers? I think what it means for you guys is that listing agents to people selling houses are actually starting to change the expectations. So we're not starting to list like kind of in this area where we kind of look at the last 6 months and go, well, the last 6 months we'd price it at 650. We're actually starting to go, well, actually this house is more like a 700, 725 listing price. So we're being a lot more sensible with where we list the house, which means when the buyers come along, how you're looking at it is that you're kind of going, well, it's fairly close to where it should be. Here's where I want to pay. And there's not a lot of gap between the two. So we're not seeing those crazy days where it was like $150,000, $200,000 over asking price, because the listing price is starting higher. It's starting to be more sensible. So for instance, whilst we're looking at the price, let's look at this. We sold, well, let's start with this. 431 houses we actually sold in the month of July. Last month, that was 585, so we are down 26% on the volume of sales, 154 houses. Last year, we are down 123 homes on last year, down 22%. So you can see that the volume of the sales, the volume of the transactions is coming down from the start of the year. And even the big thing is comparing it to last year. So what does that mean for buyers? It means that the interest rates have been going up because we're trying to cool off inflation. So we raise the interest rates, and that has a direct impact on you as the buyer and your actual purchase power. So now all of a sudden, whereas you may have qualified before, now you can't qualify. Either you want to go on hold and just basically not look for houses, or you've looked at what your mortgage prepayment amount's going to be now and you're like, that's gone up quite a lot. Another reason for us to pause. And therefore you're sitting on the fence a little bit, and therefore the volume of the sales is coming down. So that's what we're seeing. Let's look at the listings. 660 new listings were brought onto the market in the month of July. That was only 561 in the month of June. So we're up 18% on that. We're also up 43% on the volume of listings from last year. So all of a sudden you can see that we're putting more listings on. We're not selling as much because of the interest rate and the inflation, obviously, that the government's trying to control. That puts us at 1.5 months of inventory. That was 1 month last month. 1 month last month, it was 1 month. So you can see that all of a sudden we're starting to balance out. Now, it's 1.5 months of inventory, still a seller's market, not even close to being a balanced market, but we're sliding in that direction. So, are we going to get back to 5 months of inventory on the market? No, I really don't think so. It would take an awful lot of houses to come onto the market that basically puts us at 5 months of inventory. So let's reverse this. We sold, let's make life easy, 400. To get a 5 months of inventory, we would need 2,000 homes active for sale. It's not happening. There's no way that we can actually produce and list that many homes in that short a space of time. So the choice, there is a little bit more. Yes, there are definitely a lot less competitive offers. So that's what it means for buyers. What does it mean for sellers? Be sensible with your asking price, because it's not going to be that status anymore. Yes, there's going to be houses that are crazy. There's going to be ones that are going over asking price. But the amount of listing price, you can see we're getting a lot closer to what we're actually selling for. So what does that mean for sellers? Stick closer to your actual end goal number of what you really need. The market will tell you in the first 10 to 14 days what it thinks of your price. So no viewings, no offers, something's not right. Price, conditional, location. Price is probably price is probably the one when you compare it to the condition, because you can't change the location. Get viewings, get no offers. Still down to either price or condition. Get viewings, get offers. You've got the right price. Now it's just negotiation to find the price that everybody is comfortable, everyone's happy with, and everyone has a good experience in buying the house. Now, when we start looking at that over asking price stuff, let's go into that number. So I did a quick look of the 431 houses that were sold, how many were sold for over $100,000 over asking price, which if we go back like 4 or 5 months ago, that would have been quite a few. 13 houses. Okay, what about over 75,000 over asking price? 30 houses. Still not even 1% of the actual listings that we sold. Let's go to just 50 over asking price. 84, 2%. So now all of a sudden you start seeing that people aren't going that crazy over asking price. Now let's have a look at how many houses sold for at asking price or under. 174 houses at asking price or less than asking price. So sold 431, nearly a third of those homes were sold at or underneath asking price. Now, does that tell you that we're obviously getting a little bit more balanced and buyers are definitely being more wary about putting in high price offers? Absolutely. And that's why you can see that not only has the market changed, past tense, it's not changing. We have gone through that change and it's taken only a couple of months, and this is where we are. This is our new reality. So let's look at sales to new listing ratio, because that's a really good one to see, well, okay, how are we actually doing? So we have 431 sales, 562 new listings came to the market. That gives us a 77% sales to new listings in terms of volume coming on the market. How many houses in units did we sell? Last year, that was 88%, and it's more or less the same as it was in June. So the new listings, or sorry, the active listings, that's the 660 number that we're talking about. So you can see that 660 active, we listed 562, we sold 431. The numbers are all starting to line up. Go back 2 or 3 months ago, the sales to new listing was over 100%, which means we were absolutely selling more than we were putting on the market. Those numbers have changed. So it's all kind of heading a little bit more into that buyer situation. Now let's look at what happens with renting, because when the mortgage rates are going up as they are now, people are starting to find that they can't qualify as much for a mortgage, which means our first-time home buyers are starting to look at the money they've got saved up to buy a house, how much they're going to have to pay in a mortgage, the rates are going up and they can't afford that new mortgage payment. So they're renting for longer. So the impact of that means that our rental vacancy is coming way down. So for everyone who's an investor, yes, it's a challenge to find income properties, but from a vacancy rate point of view, it's going to be crazy. And of course, watch what happens, because when there is no vacancy, watch what happens to rental prices in terms of how much people are paying in rent per month. They're probably going to start creeping up, especially September. We've got all the students coming back as well, and they're going to add to the demand. It's going to get more expensive for a rental property in terms of how much rent you're going to pay. Absolutely. Unintended consequence of raising the mortgage rates. More people are going to stay renting for longer. But there you go. That's just one of those things that inflation does. So now let's have a quick look at some markets as well. So joint in number 1 position was East Hants, Colchester West, as well as Timberley. Both of them sold 36 houses. However, the differences are Timberley prospects at Margaret's Bay area, average price there, nearly $600,000, $597. 14 days on market there, 4.3% over asking price, 2 months of inventory. Whereas when you go to East Hants, average price there, $404,000, 21 days on market, only 1.8% over asking price, 1.8 months of inventory. So when you look at that, you can see that there's obviously longer days on market, because our average days on market in the HRM area is 19 days. That's up. That was 14 days last month, and it was 14 days last year. So things are taking a little bit longer to sell. 19 days. It's still really quick. It's just compared to what we used to, which was like 6 or 7 or 8 days. Now it's 19. So it seems like it's taking longer, but not realistically, not for the Halifax market. So let's look at number 3. That is good old Sackville coming in now. The prices have dropped there quite substantially. We're down at $412,000 average price. 16 days on market, 0.9 months, 32 homes for sale, and 4.8% over asking price. Let's bring in Bedford, because that was in number 4 position. What did they do? Their average price was $704,000. Pretty much up there, but only 1% over asking price. 20 days on market, 1.9 months. That gives you an idea, everybody's getting closer. So it just shows that the Halifax market is starting to just cool off a little bit and become a bit more sensible. Now, one of the things that we do want to do is I wanted to have a quick look at one market, Halifax South. 5.2 months of inventory. So there's 26 homes in Halifax South available. We only sold 5 homes. That gives you the 5.2 months. But average sale price, $907,500. Average list price, $965,000. $58,000 underneath asking price. And there was 2 houses in there that both sold for over $100,000 lower. So that's really what's going on in that. But it just shows to you that the market is absolutely changing. People are putting in offers and you can get some serious discounts. So that really sums up everything. I don't think there's anything we've missed on there. We're going to go into some more detail on specific markets in there as well. So we'll shoot some more videos and we'll actually get in the nitty-gritty of some of the other bigger markets that we're seeing in terms of what those are doing specifically. They'll be much shorter videos because we're covering the whole of HRM here. So that's really what's going on. If you have any questions about the market, your specific area, and you don't want to wait till next week, then by all means get in touch. Contact details are all over the place. Don't forget, hit the button to subscribe. Add any comments that you want down below as well, and we'll try and take care of you. But in the meantime, those are the stats. The market has changed in Halifax.